Okay, hello. I'm so sorry for going off. I went to collect my food. Okay, so here I will be analyzing probably a little bit of DXY and a little bit and more on the gold. Okay, so yesterday obviously we had CPI. CPI was the movement. I'm gonna take you guys to pls.gov because CPI usually I check my CPI numbers here. So if you guys want to check it out, I'll probably leave this in the description of the live. I'm gonna just do it now. This in the how do I do it? Okay, I'm gonna just leave it in the chat. Okay, so the link where I check my CPI is in chat. You guys can go and check it out if you guys want. So to check CPI numbers, because if you guys use things like Forex Factory or Forex, okay, usually people use Forex Factory, right? So for Forex Factory, you're gonna have the numbers like load very long. The actual numbers are gonna load very long. So what you guys want to do is head over to pls or gov. Link is in the chat. Please go and check it out. What you guys want to do is maybe go to economic releases, go to latest release, and at the top here, major economic indicators, click CPI, consumer price index, and at the very top, click CPI summary. So now on yesterday, I'm going to use yesterday as an example. On 9/29, I live in Singapore so 9/29, it was stating that the latest modified date was December 13, 2022. So you're gonna wait until 9:30. Now 9:30, the latest modified date would change, and if you click into consumer price index, which is this one at the very top here, if you guys need, if I'm going too fast, please replay the video multiple times. I think it helps me quite a bit also, because it doesn't help me, as in I'm saying that it helps me if I replay the video more than once. It helps me to understand. So the numbers of the current CPI would be up here, 6.5. So that would be the one that comes out on the actual. So for those of you who traded CPI yesterday, I myself did trade CPI yesterday. I made a huge loss, but my point is that usually on the new year, January, they always change the way that they calculate CPI, so the actual and the forecast will always be the same. If you guys don't trust me, I will take you guys to Forex Factory, I'll take you guys to CPI, and I'll take you guys all the way back to probably 18 or 17. So 2017 they didn't have an actual because I don't know why. 2018 January, as we can see right here, January 12th, forecast and actual came out precise. We also have 2019 coming out the same. We got 2020 coming out also the same right here. We got 1.4 January 2021. 2022 we have also 7.0. Now this happens on every January of the new year of the January. Every January CPI or whatever they forecast will come out the same as the actual will come out the same as the forecast, because every year they change the way that they calculate CPI. Now they don't change the methodology of the way that they calculate CPI. It's just that they change the numbers, the normal base, the base market, like the base card. They change the price of the base card that they use, so the numbers varies. So I would assume that they calculated beforehand and then they put the actual and the forecast the same. So January CPI, if you guys did trade and you guys made losses, don't worry, keep your heads up. More days to come, more opportunities to come. But I do want to say that DXY has broken below its crucial support of 103.4. It consolidated there, hoping for a higher number, but it did not come out. It came out even because they changed the CPI numbers. The way that they calculated the CPI, they changed the numbers. So we did see a drop because for CPI it's actual greater than forecast, right? But sadly it broke even. So we would not see upsides to DXY but only downsides. Now buyers did manage to close the candle bullish, but because the top wick is much more longer than the bottom wick, we saw a drop. Probably I would assume the drop was to fill up the wick of the bottom wick of the previous candle, which it did fill up, closing, and then straight after that it went up. Right after that, because DXY is hoping for a lower hike rate, so rate hikes are typically not good for DXY. So it went down, and right now it's consolidating. I would assume that they will try to tap the 102.628 range, but if it does tap onto this range, I would not be and if candles don't close above 102.6, we will not see 103.4 coming anytime soon, but we will see more downsides to DXY. So that's all I want to talk about DXY. If you guys take a look at crude oil, crude oil is doing its thing, right? We have Exxon Mobil also that's been doing really amazing. For those of you who invested in Exxon Mobil back in 2020, like I did say, to invest in Exxon Mobil, you guys will be doing great. For those of you who did not, then I am so sorry, because Exxon Mobil is the only oil company that has been that has made a improvement of more than 200% since 2020. For those of you who don't believe me, just head over to Exxon Mobil and change to the monthly calendar, and then take a look at how much they have increased. So now we're going to take a look at gold. Now gold had its crucial support at 1865, as we all know. It's been talked about, every YouTuber has been talking about 1865 being a good support and a resistance. So we all know that support becomes resistance and vice versa the other way. Now I do want to say that 1865 is a very good support, but will we be seeing 1865 anytime soon? That is still unknown, because we don't have any how do I say, we don't have any indicators of the market coming down to the, you know what, I'm gonna head over to the bigger time frame. So on the 4-hour time frame, we have a clear-cut uptrend. We have a breakout of the downtrend previously. I'm gonna just draw one rough downtrend line like this. We have a breakout, no retest, but it did make a flag and then it went up again. So that is a breakout on the 4-hour, and ever since November it's been climbing and climbing and climbing. A lower rate hike, because CPI did drop from previously, it dropped by 0.6. We will be seeing a 0.25% drop. Sorry, we will be seeing a 0.25% rate hike. Will it be 0.5% rate hike? Maybe, because I know that Powell hates the stock markets and the bonds flying so high when he just goes slightly even dovish, right? So I would assume that he will be doing that, the Feds will be doing a 0.25% rate hike because of how good the CPI numbers were. Though they were hoping it to come down slightly lower than that, but nothing that they can do because the interest rate is really high down there. So a 0.25% rate hike would be logical, especially the drop of 0.6% since November CPI. Now the only question that I have for everyone is, will we be seeing a trend line? Will we be seeing the market to come and retest the trend line? Will we be seeing? I don't think so. There is a imbalance of market from its previous high. There is no pullback. There's pullbacks missing. There is none to indicate somewhat of a psychological support for the market. The market do have a psychological support, which is the trend line, but because there was no pullback here and here, okay, this pullback here is still pending, but the way that the market looks, it does not look to be coming down. So there is a imbalance here and here. So now with those imbalance, we also have a breakout of structure over here, right? This whole trend line is a break of structure. Now what do I mean of a break of structure? What I mean is that market has came down to touch trend line once, once, twice, 3 times, 4 times, 5, 6. It didn't touch here, so it touched 6 times. So now you know that your trend line is really good. Now I know what some of you will be asking. Oh, I watched some YouTubers say, usually on the 6th, on the 4th or 5th time the trend line touch, it will break down, retest and reversal. Yes, that is correct. It is correct based on technical analysis. All these movements here, majority are technical analysis, but gold is heavily based on fundamentals as well. So if interest, because CPI numbers came out so cold, we have gold making a up move. Now next, I would assume that gold is probably waiting for the Fed fund rates in February, but I would see that market might range in this area here, going up, ranging here. So I don't know if you guys want to take down these ranges. I do have a range from 1871 to 1891, a 200 pip range. I also have a resistance at 1915. I can explain why I have a 1915, because previously market was forming higher lows and a downtrend, and on the downtrend creating higher lows. 1915 has one touch, two, a liquidity grab multiple times here, some resistance going on, and a support. This side is very messy, so I don't like 1915 as much, but I would say that 1915 is a really good support rather than a resistance, because we see that on the left side, when market was initially on an uptrend, we see that market was really messy, going upwards is really messy. So we know that it's not a very good resistance, but we do know that it's a good support, because it went for a fake out 2 times, a liquidity grab here. We also got a few supports going on here, and a touch here, forming a lower highs. Sorry. So 1915 is also a good resistance, support rather than a resistance. 1946 is just a marked out area for those of you who want to go for swing traders. 1916 to 1915 can be your TP1. 1946 can be your TP2 if you have a really good buy. Let's go down the time frame to the 1 hour. So the 1 hour time frame, we can see how messy the chart is. A really long consolidation zone here, right? And we know the harder it consolidates, the more volume that it's going to break out with. Sorry about the background thunder. So that's why we saw so much movement on the CPI. Will we be seeing any more movement? For those of you looking to get any positions, I would say to wait for a breakout above 1901. So, and you guys, after getting a breakout over 1901, you guys do get the confirmation that there is a possibility that market, okay, basically what I'm trying to say, that if market has came up to 1901 and very quickly dropped, it came up again, tested it and dropped. So I won't be surprised if market just goes up, does a fake out, comes back down and starts ranging here in between 1894 and 1901. Now when market does go for a breakout over 1901, wait for a retest and a confirmation that market is trading well above. So usually you want to wait for basically wait for a single 4-hour candle to close above 1901 range, and wait for the next few 30-minute, 50-minute candles to close above 1901. If you guys do see that it's trading well above 1901, you guys can go for a small go for a buy. TP1 will be 1916. Okay, these numbers are getting hard to fucking pronounce. 1916 will be your first TP, and obviously your goal would obviously be 1946. Please do this. Is I am not advising you to follow the way that I do. This is all educational purposes. I'm just doing this because I like to do market analysis. So for now, that is all that I can see. A possible buy above 1901, and no, I know what you guys thinking. Any sell positions? I'm sorry, I am not gonna advise you guys on taking sell positions because I have I mean, do I need to say anything? Like, come on now. The whole trend is up. You don't want to take any sell positions because market might do a easy fake out to the sell side, right? You can sell down, and let's just say you sell here, right, at the current candle 1894. Your stop loss is over here at 1892, 1902, and then it comes down, and then you're like, sell now. You can easily just do a fake out and grab your liquidity and just go back into range. But currently we do have a New York high. Asian session has officially grabbed New York high's liquidity. So now we have, did Asia form? I would say Asia did grab liquidity from New York's high. This is New York's high, and this is Asian's high. So we're heading into right now as I'm speaking is actually Euro session. So we're gonna see some movement back up to maybe beat the Asian high to grab more liquidity there and probably come back into the 1894 to maybe even the 1880 range. But guys, it is a Friday. You guys know NYC loves to buy market up on especially the last few hours. Please do be safe. My analysis could be wrong as well. I'm not the best trader in the world. I am helping myself, I have goals of my own. But I hope this analysis has helped you guys. I just want to advise, don't sell, just buy. Okay, be safe.